Hey everyone, it's PK here. I'm here with Bobby, who is a client of mine, I think a friend of mine as well. I hope you don't disagree with that. So Bobby signed up to the Property Investment Accelerator probably like 6 months ago. So I'm recording this in December 31st, New Year's Eve, quite sadly. And I thought it'd be great to interview Bobby because he has done the Property Investment Accelerator. He was already an experienced property investor. And just to try to help everyone that's listening, the big lessons that he's learned from his own property experience, like he's been doing it for, I think, more than 4 or 5 years. And then the additional refinement of his property strategy that he learned from the Property Investment Accelerator, how that helped him. And he's just trying to, he'll share some tidbits, some golden nuggets to the extent that we can to help you guys in your own journey as well. He's experienced, he's not a brand new investor. So if you're brand new listening to this, if you don't have any investment properties, if you're thinking that a lot of people are making money around me through property investing, I wish I could hear from someone who's just legit, someone who's on the ground investing, not someone who's trying to sell you something like me. Then Bobby's your man. So hopefully this adds value. And if it does, you can leave comments below and maybe Bobby or I can answer them. So I just wanted to thank you, Bobby, for making the time. I really appreciate it on New Year's Eve. So maybe we'll just start off by, to the extent that you want to go deep or not deep, what was your property journey over the last 5 or 6 years before you met me?
Yeah, so hey everyone. PK, thanks for the invite. Obviously a little bit nervous talking on an open forum. But no, all good. So yeah, I started investing in about 2015. Sort of early 2015. I started looking into it 2014, so it took me a little while to step in, just understanding financial side of things, getting a little bit of a team together. Obviously, as most, I actually stepped into looking towards using buyers agents at that time, and still did all the way up until now, really. Prior to your course, let's say. As at that point in time, I just felt, because I was quite busy with work, so for me, it was a lack of time. But also throughout my journey, I've realized that I've also outsourced not just the execution, but I've outsourced the knowledge side of things, which for me has been a bit of a detriment in the sense of acquiring the right type of properties that sort of get me to that end goal that I wanted. I knew in my head exactly what I want and where I want to go. But I almost felt very trusting in the sense of using professionals, using buyers agents, using a team around you, people that they recommend, etc., to just build a portfolio. All in all, over 5 years, I think, I've been very blessed to do well, and I've built, a portfolio of multiple properties. That spread over about 3 or 4. There was 4 states, but I've sold 1. It's been overall, I guess, a portfolio with quantity in it, but whether it's had quality in it. And I think that was my bugbear over 5 years, where I just felt, how come out of these multiple properties, only 1 or 2 have performed the way I thought it would perform, and the rest have just been stagnant, just done nothing. And there was no signs of any further growth or anything like that. I guess my journey before, meeting you, PK, was I still just went year by year using buyer's agents, get another loan, get a pre-approval. Hey, buyer's agent, find me another property, and then just go from there. And then we just bought, and I pretty much just was very trusting, like wherever they said to buy, just buy. And it was always the same type of, I guess, regime or script, let's say, which was, under market value, good potential for growth, infrastructure, population growth, affordable. But I never really dug deep into, I guess, their reports or the reasons why. I just figured I'm paying a fee here, and it was a substantial fee. Obviously I'm going to reap the rewards. But as the years went by and I listened to more and more podcasts, I listened to, I started trending my own portfolio and just seeing where it's going. And then I realized, what was the biggest difference between the 1 and 2 that performed well and why the rest didn't, and what was so different about that? And I had almost a lingering question in myself for almost a year. Whereas, what is it that, I guess, buyers agents or these professionals look towards to get these type of properties, or why they recommend these type of properties? And what is it like? How do I sort of learn that for myself? How do I be able to make that decision with confidence and understand what protocol they go through? And obviously, not to cut too quickly to your course, PK, but so after what we've gone through now with your course to what I knew before, it's a clear, huge difference in terms of, I guess, my thinking, the generalization of what people think is going to make a property grow, and then what actually does.
Yeah.
And that was a big learning curve for me, and understanding, like, point blank, would my portfolio be the same now, knowing what I know now? And I would probably say no, because it would just be totally different. Like not only the suburbs, but the property selections, what I've had, what I've got. But in saying that, property is very forgiving, and so I'm in no rush to, I guess, make any drastic changes. But it has definitely made me think of opportunity cost and what I can do now, instead of just waiting and buying and, I guess, hoping. The strategy would be to buy and hold with confidence, not buy and hope that it will grow, because with any property, it's going to do okay over a long period of time, let's say. But yeah, I guess the journey in itself, hasn't been an easy one. As they say, if it was easy, everyone would be doing it. So, but it has been a rewarding one on a personal base, and just to be able to build and continue to build. And I was very hungry. I was very, I guess, aggressive in my portfolio building, where I just did it very, very fast. I built the portfolio over 3.5, 4 years to what it is now. And then I think I got forced to stop purely because of the numbers game, which was finance.
Yeah.
And then that for me was probably a blessing in disguise, where I feel like I got stopped for a reason, because it was time for me to now just take a step back, look outside of this box, and understand, why have I been stopped? How can I keep moving forward? And what, it's not really a game of property, it's a game of finance, but then how these certain properties can help you with those finance numbers, like in terms of equity, cash flow, depreciation, and just really maximizing on everything that you can achieve through property investment.
Yeah, no, that makes sense. And look, I think it's a very similar story to a lot of people when they initially think about property investing, and they listen to a few podcasts and read a few books or read a few blogs by buyers agents. Everything looks really appealing, and it is appealing. Property investing is great, but it's not a case of let's buy as many as quickly as possible. And not that this was the case with you, Bobby, but sometimes we can get into the sort of trap of thinking the number of properties dictates my success. And once again, not that it's you, but it's kind of like the ego and vanity metric that I have 9 properties, or I have 11 properties, or 5 properties. It's very easy to pay a buyer's agent 10, 15 grand, and if someone's on a relatively good income, you just accumulate that portfolio, and it's like, look at this. But once you start becoming a little bit more experienced, a little bit more savvy, you start to realize that, hang on, I have a number of properties, but they're actually I'm not that much closer to retiring than I was 5 years ago, or, because those properties haven't performed as well as I thought they could have, I'm now stuck with the lending. None of them, or not all of them, are giving me that positive cash flow plus growth in the short term. So I suppose what was your understanding of what drives capital growth from what you had learned from the buyer's agents, and what is your understanding of what drives capital growth having done the course? And you don't need to go into the super detail, but as much as you'd like to share.
Yeah, for sure. I think from a general consensus, everyone looked at population growth, infrastructure, schools, transport, obviously the location or distance from a CBD, etc., like that. And these were just very generic fundamentals in a sense of, I guess, what you would do in your own backyard, let's say, if you're looking for a home. And what we have or what I've known even generations do over the years, we just look at those very generic fundamentals, and they're very important, but there's a lot more that I feel those are on a macro level, in a sense, instead of a micro level where you have to really dig deep and go further. Because in saying that, all the properties that I have now meet all of those macro levels. But then why only 2 or 3 have performed over those 5 years differently to the rest? And I mean, as without saying, definitely supply and demand has a huge factor in that. But also when you look at just trending data, like just trending what it's done, where it's going, all the triggers in place for it to basically build up like a pressure vessel and pop. But if all those right ingredients aren't in there, don't expect anything to change either. And I think that's what I've definitely learned from doing your course, because all those macro levels are met, and definitely those has been, I guess, what's been my learning curve, what I've been learned through property seminars, through buyers agents, which to be honest, all great guys and great advice. And to be honest, there's nothing wrong with using buyers agents, but I think the biggest thing is, you can, like I've heard that saying, is you can outsource the execution, but don't outsource the knowledge side of things. Because end of the day, it's almost like when you do your tax return, the tax agent makes you sign this declaration to say, all this information you provided for me, so you're liable for any misclaims or anything that you've falsely identified in there. Yeah. And it's the same for when you sort of use these services, even through a broker, through a buyer's agent, through an accountant, whatever it is that your own knowledge needs to be, I guess, you need to be, constantly training yourself, constantly learning everything that they are trying to give you advice on, because that's how you can sort of become more, interrogating in regards to their advice, and understand or really question what they're going to do and where they're leading you, even on a loan structure or anything like that with the broker. Like over the years now, I know now what's the difference between a good broker and a not so good broker, and someone that wants to offer you this when it doesn't need it, and etc. So you got to understand the advice that you get, is it I guess who's paying them in a sense, and then you understand as well, like is that advice suitable for you and in your position and your goals? And on that point, like over the years I noticed as well, like my strategy kept changing because my rewards weren't there, or what I thought would be I'd end up with just wasn't there. So I kept trying to change and try to play catch up to say, how can I catch up with this? How can I catch up with this? And I change strategies, like, look for a renovation. Look for a capital growth property. Look for a cash flow property. Look for something that I can subdivide or develop. And it's all good, but not one size fits all. And it's so true, that saying, because everyone's goal is very, specific, and needs to be, I guess, catered just to you and your own needs or your family needs. And I fell into the trap personally of, building up to a number, because, that was, I guess, the epitome of success. Like, you need double-digit growth, double-digit, portfolio to be successful, or you need to get this X amount of numbers of properties. Doesn't matter where, they could be in the middle of Whoopal, but if you had 10 of them, 20 of them, you'll be successful.
Yeah.
And I over the years now I learned, and I think you mature. You mature as well, and you just say, it's not the quality, the quantity, it's a quality. And if I'm honest, I can see myself downsizing now to say I don't need that many. I can just have half of what I have, and see opportunity costs to sell the half that I feel won't perform, and invest the capital or those resources into other portfolios that will help me, I guess, fix up the other half of the mess that I feel I got myself into. Because obviously, if you were to start all over again, it'll be a massive mission. So I think that's the other thing is, learn to accept your wrongs and your mistakes, and never see anything as a real failure, let's say, because for me, I sort of almost fell into the trap of thinking I failed as well. Like, I failed, I've done wrong, and I went through a journey of almost 18 months where I did nothing because I was just stuck in my little pit of feeling sorry for myself, and not knowing what to do next. But then I got back on the bandwagon and just said, you know what, I think the best investment I can do now is in myself. And so I started, again, reading, learning, following Facebook groups, etc., and just trying to understand, like, the most general consensus, even now, from most advisors or anything, is directed in, like, say, one suburb or one certain area. And it's like, why is everyone choosing that? Why is everybody going there? And, like, I've bought properties there and they haven't done anything, so what's happening? Would I buy there again? No. And so why am I just know if I'm going to go see that buyer's agent or see that advisor, I know they're just going, oh yeah, buy another one over here, and I just be like, no. And I think I started hitting that roadblock where I just like, no, the advice is consistent, the advice is the same, but the result's not the same. So what's different? And I just had to learn that for myself, and I don't know, maybe God opened a door and I met Mr. PK because he came right at the right time where I was I guess I was on a soul search where I was like, I want to learn these fundamentals. I want to learn what buyers agents or advisors or these investors or pro investors know. But the real science behind property investment, or the real science behind finding property. And I remember PK had me not at hello, but he had me at, if you ever use a buyer's agent again, I'll be very surprised.
Very disappointed, I think I said.
But when he said that with so much confidence, I was just like, man, I need to know what he knows. Because that was my biggest bugbear. I honestly felt like I can't do anything without a buyer's agent. I just couldn't do anything without someone's advice. I was, I guess, lacking a lot of confidence, like lacking, even though I built multiple portfolio, but and people would say, oh, you've done well, oh, you're an experienced investor, you've done this. I didn't feel it myself. I didn't feel like I could do anything without anyone, because I was just like, I've outsourced all this knowledge, I've outsourced all this execution, everyone has done this for me, so I don't even know if I want to make a change or a move without them now moving forward. That was a real good internal challenge for me, to understand, in terms of like the course, like your course was so structured. It's probably the one of the most constructive and most useful, and like it was the best sort of sounding board course for me, because a lot of the topics in general were things when I saw your course, I was like, okay, yeah, I've learned that over the years, or I know that. But I went with complete humility in your course, because I was like, I want to start from scratch. I want to start like as if I was a baby, and yeah, it blew me away, because it basically did require a lot of unlearning from me. quite a lot of, undoing all those bad habits or bad learnings that I've learned, and really understanding the core and understanding, proper fundamentals of the science behind property. And, everything that just went from, I think the biggest eye opener was the tools that PK gives, like the budgeting tools, like even just your household budget, like just understanding every single number in that, your portfolio budget, understanding every single number in that, negotiation skills, the property selection, the suburb selection, all these tools. Like it wasn't just like data or just Google, but it was tools that is available to us on Google, but the way that it's, I guess, structured in the course, it really helped you, and intensify that search for, so that you could exactly not be just, I guess, scrolling through information, but really honing in and understanding exactly what you want to try and look for and what's important and what's not important. And for me, that was a huge eye opener, because I used to waste a lot of time on just things like, vacancy rate, which is important, but it wasn't the be all and end all. How many's on the market, or even just little things, if it was auction or for sale or offers over, and it told you what state the market's in, all those things. Sometimes when it gets to those things, you're too late, you're hopping in too late, because and that's not where you want to be. As you grow in your portfolio journey, you want to be ahead of the game, not sort of jumping in when the rest of the herds are already there. So for me, it was just a real big eye opener to learn all that. And the tools were the biggest thing, to help me put exactly all my information into these tables that PK had given, and then just really open my eyes as, okay, where is this portfolio going to be in 2 years, 5 years, 10 years, 20 years? And it was nothing that I envisioned. And for me, that was a huge opener, because I was just like, wow, now I can actually see where I'm going. I was buying in hoping, I was doing the buy and hold strategy, but I was buying hoping that these things would grow, these things would give me what I need. But, in order to succeed in that sense of what we say, or what we envision to succeed, after 5 or 10 years or 20 years, I needed a certain percentage of growth. And, there were certain properties in the portfolio where I just said, is that going to give me 10% growth in that year? And it was just like, no, it's in the negatives for the past 5 years, or it's in the negatives for the past 18 months, or, is there any fundamentals that's going to make it grow in the next 2 to 3 years? No. And I was just like, okay, why am I just buying and hoping then? I'm just wasting 2 to 3 years. And so for me, it was a huge learning curve of unlearning, learning all over again, understanding where I'm at, understanding what I've got, what I would do differently, but most importantly now is what I would probably do differently, and re-strategize myself. So whether I sell, what to sell, what to keep, it helped me, give me that confidence of, I know what properties I should sell, what I should keep, what will do okay, what is even good in a sense of, for me, on my tax purpose, so depreciation or anything like that, or cash flow sense. And certain properties that I felt were cash flow really aren't. They're more negative than, things that are low on rent and pre-tax are negative, but then post-tax it becomes positive. Some of these properties are on paper, initial paper when you buy it, cash flow, but after all expenses, after everything, and even depreciations, it was negative. And but this is just draining me. This is why I see my bank balance just going down, 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 down. And it really, I guess, shine the light on the whole portfolio from start to finish. Just, on me as well. So I had to humble myself and just relearn everything to just say, okay, it's not too late. I've got age on my side. I've got time on my side. I can reset, rejig a few things, reshuffle a few things. And I think the biggest learning for me and my wife was, you can make your 5-year, 10-year, 20-year plans, but you need to constantly be open to change, constantly embrace changes, adapt, be flexible, and just, set yourself goals and realistic goals, but don't get fixated on 5-year, 10-year, or 20-year plan and then be down about it when you don't get there.
Yeah.
That was the biggest downfall on our side, was after 5 years, we weren't where we wanted to be. So we said, what are we doing? What's wrong?
Yeah. Well, I think that was one of the biggest things that I got from you. So there's 3 things that I learned from what you're saying. That the first thing is like humility. Like, even though there has been successes in your portfolio, and there's also been, I wouldn't call them failures, but lack of huge successes. It's all a learning curve. Like, even though you've gone to multiple buyers agents and the properties haven't performed the way they should have or they could have. It's one thing to say, all right, well, property investing is too hard and, I'm just going to sell everything and it's, let's do something else. But you actually humbled yourself, like you were saying. And it's actually remarkable for someone who has such a large portfolio to then do a course on property investment. I mean, you should be the one teaching it with the quantity of properties that you have, but that's actually it's a sign of character. So I think, for anyone listening to this, it doesn't matter if you have 0 properties or a lot of properties. The way to get ahead, and not just real estate, but anything, is start from a position of humility. Don't ask if, ask how. That's how you should be approaching things. The second thing is, just because, as you said, Bobby, just because you're hearing all the buyers agents, all the pros talking about the same location, talking about the same thing under market, positive cash flow, Southeast Queensland, Logan, Ipswich, all that kind of stuff, doesn't mean that that's actually a good place to buy. Okay, so you can't, what was it you were saying? You can outsource the work, but not outsource the accountability, or not outsource the knowledge.
Yeah, so obviously, as the saying goes, and I sort of I resonate with that a lot, is you can outsource the execution of your investment journey, but don't outsource the knowledge or the education.
Right.
Because that's, I guess, takes that's paramount. That takes priority or precedence in your journey, because guaranteed, in your successes or in your failures, those people that were guiding you, advising you, some may be there and some maybe won't, because at the end of the day, the choice was up to you. So you need to be, I think the biggest thing you need to do as well, is in terms of humility, is take responsibility. Take responsibility, because I could turn around and say, I bought all these things in Queensland, nothing's happened. I should be blaming that guy. That guy pushed me there. That guy told me to buy there because it was going to be good. But no, I point the finger at me, because that was me. I'm the one that signed that contract. I'm the one that signed those pre-approvals and those formal approvals. I'm the one that signed that contract to sell. I'm the one that got it rented out. So end of the day, to take responsibility and be humble, be open to everyone's journey, be open to different strategies, be open to everyone's. There's no right way or wrong way. That's what I almost feel. There are a structured and correct method, like a methodology to do things, but is it the be all and end all? Is that how 90% of investors make this success? Yes and no, but there's normally no, because there are other people that do developments, or there's other people that do commercial property, or there's other people just stick with residential, or so there's shares, or there's crypto, whatever it is. There's so many things that people make money on. But just be true to yourself, your risk appetite, your character, your learnings, and just, I think, rather than doing a bit of everything, is just hone in and just try and focus on one thing and really learn it, like really educate yourself on it.
I love this, because these are the home truths, right? Like, this is for people who are watching this who haven't invested in property and they think that, look, it all seems a bit hard, let me just outsource it to a professional. There's nothing wrong with outsourcing it, but don't outsource the knowledge, don't outsource the responsibility, and don't outsource the accountability, because they may or may not actually get you the right thing, right? And I think a lot of people struggle with confidence. I mean, you were saying you struggle with confidence even now. I mean, you have a large portfolio. So the number of properties isn't going to get your confidence up. There's there's nothing stopping you from learning, even if you have 0 properties, and doing it yourself. It doesn't take much time. It's not rocket science, like you were saying, Bobby. A lot of this stuff, like the basics, the surface level, is on Google. But how we make money is, 2, 3, 4 levels deeper. You can get the basics anywhere. It's not hard podcast stuff like that. But then to really execute, having that 10-year plan is one thing, but executing it, you need to go deep.
Yeah, definitely. And I think one other thing that I learned, PK, was really, really defining and honing on your personal goals and where you want to be and where you want to go, because everyone's different. Like, I could have multiple properties, you could have multiple properties, but then totally different goals.
Yeah.
And doesn't mean that I need those multiple properties. I could just achieve my goal with just 1 or 2 or 3. I don't need multiple properties.
Yeah.
Whereas maybe your goal is different, where you might need that multiple properties. So everyone's goal is different. And I think that was another biggest learning curve for myself and my wife, was it wasn't achieving where we want to go or what we want to do by 5 years, like whether it's to buy a PPOR or whatever it is. Like, I made that sacrifice of, I guess, renting and investing, so rent vesting, as they say. But there's that desire, obviously, to have a family, to have your home, have a certain passive income, when it wasn't just there, like it just wasn't getting there. And then understanding why, and then, being true to yourself in terms of your goal is, do I just keep on this journey of sacrificing, but then really just going somewhere where I don't know where, or really identifying a goal, educating yourself, and then exactly execute that strategy, or I guess the game plan to meet your specific goal,
Yeah.
because end of the day, the key to happiness is being happy, in the sense of, not just because of the numbers, but if your goal was to buy a PPR, it doesn't matter if you've got 20 or 30 properties and you haven't got a PPR, I guarantee you won't be happy because you don't have that PPR. And obviously for the newies, like, PPR is your principal place of residence, so your own home, let's say. Whereas for some people, your own home wouldn't mean anything. Like, you might be a single bachelor, you don't really care about your own home, you don't have kids, or you don't have a wife that nags you to say buy a home. But everyone's sentiment is different. Everyone's journey and time is different. So be true to yourself in terms of, what is your goal? What is it that you want to achieve? Is it cash flow? Is it buying a house, building a house, whatever it is, and then really work towards that. And if it means you don't get those multiple properties, so be it. Like, I would go down the road of trying to address those fundamentals in life first, because that would help your overall journey as well. Like, in terms of just becoming clearer, understanding where you want to go, what you want to do, helping you not make evasive choices. Like, someone presents you a really shiny deal, like, oh, look at this cash flow, it's in a hot capital spot, a hot property spot, whatever it is. Buy it now, sign the page, and then you get lured in because, but then if you're really clear about your goal, does that property help me get to my goal? You'll be really quick to say, yes, it does, and you'll sign it really fast, or you'll go, no, it doesn't help me, and you'll just decline, and you won't fall into those traps that I feel that I have personally fell into over the years, where anything that got offered in front of me, I was just like, yep, because I didn't educate myself. I wasn't clear about my own goals. I wasn't. I felt I was clear about my goals. I knew what my strategy was: under market value, cash flow, capital growth, a balance of both, affordable property. But really, it's just very generic and just generalized strategy that I feel is going around these days, and a lot of people are falling into the trap of just, just going with the number, just going with all these properties where a lot of people are buying in, without really thinking, is it going to achieve my goal? Is it going to achieve what I feel like it's going to give me that return or not?
Every property should be bought with intentionality. Is it facing north? Is it facing your goal? Is it not? But you need that north, you need that North Star to begin with, right? It will move, it will change as the years go on, but every property should have its place in your long-term strategy.
That's right. And within the portfolio, PK, as well, like, there's 2 specific properties that really outperform the rest. And funny enough, we actually backtracked those properties through your course using the data that was available to us and understanding what year I bought it in. And funny enough, you were actually buying in those same suburbs for your own clients at that time. Didn't know that, but that you were able to see that data and buy with confidence in those areas to do what it did. And those areas were in Victoria, like, Cryo, or in Tasmania, Berrydale. Those were my two properties that just did exceptional out of the whole portfolio.
Yeah.
And I started saying, well, I should have just bought 5 more of these or 10 more of these. Like, why am I stuck with the rest of these? Which, with openness, like, most of my portfolio is in Southeast Queensland, and it hasn't
Everyone's
really
talking
done
about
much.
Southeast Queensland. They've been talking about it for God knows how long, but it's just not performed.
Yeah,
the data doesn't line up.
Yeah, and it may go through some sort of growth as the economy goes and inflation comes through the country or throughout the world, let's say. But if I were to just buy another few more of these Victoria ones or Tasmania ones that has done really well for me, and understanding at that time what data I was looking at to make those choices with confidence, that really differentiates the one that I've just bought and held at the moment, or bought with intention to help me achieve my next property purchase, because it gave me not only very strong cash flow, but they were very, very good capital growth as well.
Yeah.
They pretty much doubled in 3 years, like 3 years.
It's possible.
And a lot of people go, no, property doesn't double in 7 to 10 years. I've generic and not really true. There's only a certain growth cycle in a property cycle within that time, and usually it is 18 to 3 years or 4 years where a property market goes through that growth, and then it just stays stagnant for the rest of that time. So as you build in your journey, you want to be that person that buys on that bottom of that ladder or that market, and then sell at the top, or you keep at the top. But whatever it be, you don't want to be stagnant for that time, because then you lose opportunity costs. Like, you lose that time. And that's how I feel about my current portfolio as well, is that there's opportunity cost there, sure. But am I in a position to just reset everything? Not really. So then I just must re-strategize and just look at what's going to help me, what's not going to help me. But like I said, funny enough, when we went through your course and then used that data and your tools to go through those properties that did do well, it was very, very clear and very evident why even yourself were buying in those areas at that time.
Yeah.
And it was very predictable about that growth to happen. Not, so to speak, exactly how much, I would say, but it was very, predictable, and you can see it, that this thing was a pressure cooker about to pop. So the growth wasn't surprising in that sense. You knew that you would get a minimum of 10, 20, 30, 40% growth. But and then even now to this day, you can still find areas like that using the data and the tools and the resources that are available to us or through the course, because it's just so structured so well that you can, I guess, repeat those same results. It's very, you can, once you hone that strategy, hone that education, and just refine those skills, you can have a, very consistent, repeatable method, let's say, to keep doing the same thing over and over again. Unfortunately, I'm in the position of buying right now, whereas I'm very eager to use my learnings, but, it's something that, now
you
that
did
I've
the
learned
course for a different reason though, right? Like, it was very unique because you already had those property. It was all around, okay, the buyer's agents have bought me these properties. Which ones are actually not good to keep? Which one should I sell? Which one should I keep? So it was a very different purpose to pivot your strategy and then go when you're ready.
That's right. But definitely, and that's what I mean. The course is so versatile in that sense. It's not just for first-time investors or, people that just want to look for a property. It could be someone with 10, 20, 30, 40 properties to help you understand what you have, what it's going to achieve, what it's going to do, what areas they're in, and just help you really, I guess, pick apart your own position and portfolio to understand, your actual position and where you're going, what you have, and what's it going to achieve for you. Because, like I said, that was my main reason to go into the course, was to educate myself, understand what I have. But also now it's given me such a larger confidence base, let's say, that if I were to go again, that I know exactly what I want to look for. Not, but in line with my own goals, but also in line with the data that I can use that's available to us on the net, but understanding what tools and what I want to look for in terms of ratios and I guess the main core fundamentals that we're looking for that, I guess, specific growth in that short time. Because one thing you always say, Pico, is obviously if we're going to invest our money, you want to do it, try and get it back in the shortest amount of time possible. Like, there's no point just sitting it there for 10, 20 years, to be, I guess, refined in your investment strategy. You want to be able to chuck your money and get it back as soon as possible, flip, repeat the process, go again. And that's how you build true wealth, and I feel that's exactly what it's given me, that confidence to be able to do that. And I'm excited because I feel, I spoke to you a couple of months back about, okay, do I sell this one? Yep. Do I sell this one? Yep. And it was just on the same page because we didn't really speak about, like, you never gave me, I guess, any advice in terms of what to sell, what not to sell, what to keep. But I just used that same learnings of you, that I was able to make those, decisions or those judgment calls in regards to what will perform, what won't perform. And I just bounced it off you, and it was just, yep. Oh, let me get back to you. And you were very helpful because, that was a real good sounding board for me to understand. Have I learnt it right? Yes. Or have I learnt it wrong? No. So no, it was really good, man. Yeah, really good.
Awesome. I'm really appreciative of everything you're saying. I'm very grateful that you did the course. I think we were on the phone for about 2 hours before you decided to pull the trigger, which is fine. It's like it's a big commitment. It's not a cheap course. It's not like one of these $2,000 or $3,000 kind of high level courses. So it's a very personal decision. But I'm grateful that you made the choice, and I got to know you, and I got to help you in my little way. I guess, just conscious of time as well, Bobby. Is there anything, without sort of marketing the course, is there sort of one key learning, one golden nugget, the biggest lesson that you would like to share with everyone that will help them, whether they're a brand new investor or an experienced investor, to actually get passive income from real estate?
I think I think the main thing is really understand what passive income is through a property, because and really know those numbers. So really nut it out, using either tools through your course, other spreadsheets that other advisors may give you or anything like that. Not everything that's given to you on a piece of paper is true. So never take that for granted. Like, really nut it out, take that time to do your own research or do your own due diligence and understand what true passive income is. But then understand as well, like I said, your goals. Like, be very clear on your goals. I feel like, don't fall in the trap of just buying for the sake of it, or just building a portfolio for the sake of it, or investing for the sake of it, because it's not easy. It's a big mindset journey, and it's all about mindset at the end of the day. There's a lot of people that don't do it, and those are the ones that will try and lure you away from that road. But so surround yourself with like-minded people, surround yourself with people that are on the same journey, but surround yourself with people that are learning and still learning. You always want to have that sounding board that's the most experienced guy, and he's done it all. So obviously have that as your inspiration of where you want to be, and take that word. But obviously his journey will be very different to yours. So his journey, what he's done over the 20 or 30 years or 40 years, we're not in that game right now. So we're in a whole different ball game now. So be adaptable, be humble, be willing to listen and learn. But be clear on the goals, and then educate yourself. Like, I think the best investment that you can do is in yourself. Like I said, well, like you said already, Pika, your course wasn't cheap. It did take me some time to accept to do it. But at the same time, I spent more on buyer's agents multiple times. And I said to myself, am I willing to spend more on a buyer's agent right now, or spend this money for myself, on myself, to learn so that I don't have to spend that again?
Yeah.
And that was the best decision I ever did, because, the best investment you can make is in yourself.
Yeah.
So once I've made that, it not only gave me education, but it helped me, be more clear on my goals, understand exactly where I want to go, what I want to do, and really hone in on, I guess, property, and understanding what passive income is, how you can achieve passive income through a property,
Yeah.
and then, what true equity is, and how you can get it in the quickest possible time frame.
Yeah.
And yeah, for me, it's just been gold, like just a real huge eye opener. Not just saying it because you're here, PA, but it's honestly, it's not for newbies, it's not for experience, it's just for anyone that's open, humble, and willing to learn, listen, and understand true property investment.
Yeah, amazing. No, I couldn't have said it better. And like, it's one thing to spend 10 to 15K on a buyer's agent every single time. You may get the result that you want, you may not get the result you want. My niche service, my area of expertise, I can't do everything. The thing that I do is educate people so they save that money, $50,000, $100,000 over a portfolio on BA fees. We get short-term growth, we get positive cash flow, and we get a sense of confidence that this thing is actually working. We're actually developing passive income. And that may or may not be the case if you just outsource the execution, the responsibility, the knowledge, and the accountability, right? And you can outsource the execution even without going to a buyer's agent. Entirely possible, as you've learned as well, Bobby. So you can get the best of both worlds. But I just hope this video, this interview, brought a lot of value to everyone that's watching. I think I didn't do much talking, which is probably good. You did most of the talking, which because you're the one who's experienced, you're the one who's actually gone through those ups and downs. And I think that's what people really want to hear. They don't just want to hear the success stories. They don't just want to hear the glossy brochure of this person got a 50K under market value property that doubled in 5 years, giving them 10,000 positive cash flow. People want to hear the harsh reality, the truth, because property investing can be easy, but it not necessarily is if you don't know how to do it. So I really appreciate you jumping on, Bobby. I know it's New Year's Eve, so I'm going to let you go. But if anyone has any questions about Bobby's journey or the key lessons, more importantly, that he's learned, you can just comment below. If you're watching this on YouTube, you can subscribe and there'll be more interviews like this. But just give it a like or love, and that way Facebook, Instagram, YouTube, all these other channels will give it out to more people. Other people will see it. They'll see Bobby's face and be inspired. So yeah, look, guys, any questions, any comments, just put them down below, and I'm more than happy to help. And maybe Bobby might even jump in and answer something. So once again, thanks so much, Bobby. I really appreciate it.
Thanks, Pika, and Happy New Year, mate. Happy New Year to everyone. All the best for 2021.
All right, take care, mate.